Howdy, everybody. Welcome to Liberty Call. Today is Monday, February 3rd, 2025. Hope you're having a fantastical day out there in the interwebs. It's a beautiful day here in Colorado. It got up into I think it was 62 degrees earlier when I checked the temperature on AccuWeather. So, 60 degrees in Colorado at 7,000 feet in February. Crazy, I know. Anyways, all right. Well, I hope everyone out there had a good weekend. I watched some sports. I know, crazy me watching sports. Cougars lost on Saturday afternoon, which was disappointing. Another overtime game where I think they've only won one out of four this year. So when it went to overtime, but they're playing good. That was their first conference loss, so I'm not really going to get too upset about it. They're playing really well. So they need a ball handler, but other than that, their defense is really good. So, all right. Well, markets are taking a hit as Trump's new tariffs, 25% on Mexico and Canada, 10% on China, send the Dow plunging 600 points this morning, with tech stocks like NVIDIA and Tesla leading the losses. Hedge funds are piling into shorts, while individual investors bet on a tariff reversal. The bond market is shifting as bank debt spreads widen, and crypto is getting crushed, with Bitcoin dropping below 95,000 in a $500 billion market wipeout. So before we dive in and get into the news, I need a favor from you. Can you give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell? How's anyone going to know when I'm saying all this smart stuff if you don't tune in when I say it, right? Okay. All right. Well, let's bring up the markets for today. Dow Jones was down only 0.27%, 122 points, closed at 44,422. S&P 500 down 0.74%, 44 points, closed at 59.95. NASDAQ down 1.2%, 235 points, closed at 19,391. The VIX was up 12.23% today. It's at 1844. Canada down 1.14. Brazil down 0.14. And Mexico, let's see, it's last closed on the 31st. It was down 1.62. All righty. Over in Europe, Germany was down 1.5%. The UK down 1.04%. France down 1.2%. Netherlands down 0.62%. Spain down 1.32%. Italy down 0.69%. Switzerland down 0.48%. And Portugal down 0.89%. So it's a clean sweep of red across Europe. And in the Russian exchanges, MOEX down 0.96%. RTSI down 3.07%. Big jump there. And the overnight markets, mostly red. The Nikkei in Japan was down 2.69. Australia down 1.79. New Zealand down 0.5. Let's see, all these are closed. The DJ Shanghai closed last on the 31st. It was at 0. The Hang Seng was down 0.04. And the Taiwan weighted was down 3.53%. All right. So there's that. Let's jump into our weekly economic update, where all your financial news can be put together in one PDF. All right. Stocks were mixed last week as investors parsed market-moving news nearly every trading day, from an unsettling AI update to White House news to Q4 corporate reports. The S&P 500 index fell 1% even. The NASDAQ slid 1.64%. Meanwhile, the Dow Jones Industrial Average picked up 0.27%. And the overseas markets added 0.75%. A choppy end of January. The week ended on a down note with news that a Chinese artificial intelligence startup had made a breakthrough, which put pressure on a wide range of tech stocks. The tech-heavy NASDAQ fell 3% for the day, but the Dow Jones Industrial Average ended the trading session slightly higher. Stocks were under pressure again midweek as investors waited on news from the Federal Reserve. The Fed voted to hold firm on short-term interest rates, even though the decision was widely expected. Markets were under pressure again after the Wednesday afternoon announcement. Stocks rallied Thursday, but reversed course on Friday. On Friday afternoon, as traders adopted a more risk-averse position going into the weekend. There was a bit of anxiety knowing that a new administration's tariffs on Mexico and Canada were scheduled to take effect on Saturday. Interestingly, it was the Dow Industrial's fourth straight week outperforming both the S&P and the NASDAQ. All right, Black Swan event. It's hard to overstate how much the markets were caught off guard by Monday's news related to the success of new AI startup based in China. What unsettled investors was the company's claim that it developed a competitive AI model that performs as well as Western counterparts at a fraction of the cost. Shocking. As the weekend progressed, markets started to process the news, began to evaluate whether it was truly a black swan event or just another development in the fast moving world of AI. All right. Key economic data this week. Monday is the ISM Manufacturing Index and construction spending. Easy for me to say. Tuesday, motor vehicle sales. Wednesday, the ADP Employment Report, factory orders, the ISM Services Index, and the Beige Book. Thursday, jobless claims, international trade in goods and services, and productivity and costs. Friday is the employment situation. Another big group of companies reporting earnings this week. Monday, today, is Planeteer Technologies. Tuesday is Alphabet, Merck, PepsiCo, and AMD, Pfizer, Amgen, KKR, and Spotify. Wednesday, Walt Disney, Qualcomm, Boston Scientific, Uber, and Fiserv. Thursday is Amazon, Eli Lilly, Philip Morris, Honeywell International, Bristol Myers Squibb, and ConocoPhillips. That is the weekly economic update. Good stuff, I know. All righty. Well, let's hop into the market recap. U.S. stocks off session lows after Trump delays Mexico tariffs. Yes. The news changed during the middle of the day. All right. U.S. stocks slipped on Monday, but managed to recover from their worst losses of the session after President Donald Trump announced a delay in imposing tariffs on Mexico. This move eased some concerns over an escalating global trade war, providing a slight boost to investor sentiment. I think that news came out around 10 or 11 o'clock Mountain Time today. So, all right, jumping back in here. After a very friendly conversation, those are Trump's words, with Mexico's President Claudia Sheinbaum, she sounds very Mexican, Trump agreed to hold off on a planned 25% tariff on Mexican imports. In exchange, Mexico committed to deploy 10,000 troops to secure its border with the U.S. against illegal immigration. Well, nice of them to step up. While this delay suggests Trump may use tariffs as a negotiating tool rather than pushing the U.S. into a full-blown trade war, analysts warn that this looming threat of tariffs could still impact inflation. Again, no one had two words to say about all the money printing back in 2020 and 2021. They just were mum. It's fine. You know, we had the Treasury Secretary Janet Yellen saying that this inflation is transitory, which is a fancy word for temporary. And well, it has not been temporary. It's been long lasting, and we've seen zero deflation. So again, the hand wringing is simply because they don't like Trump, in the journalism world. So again, I'm not a Trump person. So I voted for him 3 times, but there's like any good anarchist libertarian, I could pick apart, probably 50% of the things he does, very, very easily. All right. Economists at Capital Economics noted that tariffs would likely drive up consumer prices, reducing the Federal Reserve's ability to cut interest rates in the near future. Yeah, because again, we need cheaper lending. Trade-sensitive stocks, including major U.S. automakers like General Motors, Ford, and Stellantis, initially dropped but trimmed their losses. GM, which produces more vehicles in Mexico than any other U.S. automaker, that's why I don't buy GM products, remains particularly vulnerable. Additionally, Constellation Brands recovered slightly after Canadian provinces retaliated by pulling U.S. alcohol from government-run liquor stores. Oh my God, what will we do without the alcoholics in Canada buying our booze? We got 300 million Americans, well, probably close to 400 million if you count in all the illegal aliens who are living here within our borders. All right, moving into earnings season with over 120 S&P 500 companies set to report earnings this week. Investors are closely watching results from tech giants like Alphabet and Amazon. Other major companies, including Alibaba, AMD, Walt Disney, Qualcomm, and Uber, are also due to release their quarterly figures. While January's manufacturing PMI is expected later in the session, all eyes are on Friday's non-farm payrolls report. Morgan Stanley forecast job gains of 140,000, citing weather disruptions, wildfires, and labor strikes as potential headwinds. All right, so let's dive in a little deeper into the data. The January ISM Manufacturing Index via First Trust from Mr. Nate Guernsey. All right. The U.S. manufacturing sector showed signs of strength in January, marking its first expansionary reading since October of 22. The ISM manufacturing index climbed to 50.9, surpassing expectations and signaling a potential turnaround in the sector. A deeper dive into the report reveals that growth was mixed, with 8 industries expanding, 8 contracting, and two remaining unchanged. Encouragingly, both demand and output contributed to the overall improvement. The new orders index surged to 55.1, its highest level since 22, while the production activity also rebounded, reaching 52.5, the first expansionary reading in 8 months. Business sentiment appears to be improving, with many survey respondents expressing optimism about the steady to strong customer demand in 2025. This could reflect early signs of a Trump bump as as businesses gain more clarity on regulatory policies and anticipated tax cuts under the new administration. This optimism is also evident in hiring efforts, as the employment index jumped to 50.3 from 45.4, marking its first expansion in 8 months. However, inflation remains a concern, particularly as the prices paid index rose to 54.9 from 52.5, highlighting ongoing cost pressures. Additionally, potential tariffs on Canadian and Mexican imports could disrupt supply chains and push costs higher. See, that's how you say it from a objective point of view. These tariffs potentially could cause costs to go up, in the production chain. That's all you gotta say. You don't have to, "Oh my god, this is the worst thing ever." I mean, again, it's all in just how you say it, and, I mean, you everyone has a bias. I mean, I'm a, libertarian anarchist. I hate both sides. I mean, are there some things I would pick from that, I could live with out of those groups? Certainly. But, it's just, I try to keep my biases as even keel, or I pick on both sides equally. So, like it or not, that's just the way it is. All righty, let's get to our last article here. It's the Monday Morning Outlook from Mr. Brian Westbury at First Trust. This week's article titled Inflation, Tariffs, and the Fed. A little bit shorter, so we'll get through this pretty quick. The Federal Reserve made it clear on Wednesday that rate cuts aren't happening anytime soon, which is good news for those who want inflation. Which is good news for those who want inflation to return. Okay, yeah. Which is good news for those who want inflation to return to the Fed's 2% target. Unfortunately, progress on that front has stalled. The PCE price index, the Fed's preferred inflation gauge, rose 2.6% in 2024, only slightly better than the 2.7 increase in 23. Meanwhile, core PCE, excluding food and energy, rose 2.8%, and super core inflation, excluding food, energy, goods, and housing rents, actually accelerated to 3.5% from a 3.4 the prior year. Adding to inflation concerns, the Trump administration is imposing new tariffs on imports from Canada, Mexico, and China. While tariffs do raise prices on effective goods, they don't necessarily drive long-term inflation. Without looser monetary policy, higher prices on tariff products means consumers will have less money to spend elsewhere, putting downward pressure on other goods and services. Again, that's how the if you just pour money into the problem, it inflates the entire economy. Yes, you may have some inflation in particular areas where there's these tariffs. But again, like they just said, if you only have $100 to work with, and your maple syrup coming from Canada goes up by from $10 to let's say $12, and then so now you have two less bucks to spend on everything else. That's the way it works, as opposed to when you just pour money in and send out stimulus checks. You got more money for everything that's more expensive, and that just again drives costs up everywhere. Where was I? All right. For now, finishing up. For now, the Fed seems content to use tariffs as an excuse to keep rates higher for longer, even if upcoming economic data like employment, retail sales, and inflation shows signs of a slowdown. Rate cuts are unlikely. If the Fed reacts too aggressively by loosening monetary policy, stagflation becomes a real risk. Either way, the stock market faces headwinds, signaling the end of the easy money. Yeah, well, I'm not holding my breath on that. These people in Washington are more than eager to, undo any good that they may do. So, I mean, and it's funny. There's been a lot of crying and whining on the social medias, especially like Reddit. If you go to the Fed News sub, those people are some of the most ungrateful federal employees I have ever seen in my life. It's the entitlement, and we're not supposed to, be efficient. Really? I mean, I only spent 4 years in the Navy, and again, this was 1993 to 1997, and even there, I had my complaints about how inefficient things ran, how ridiculous, the stupid policies. Why not have a professional military as opposed to churning through people like myself every 4 years who, you bring them in, You send them off to boot camp. You get them in shape. Teach them all about military bearing and all that BS. And then then you go off to your school. And for me, it was 2 months of learning how to be an airframe mechanic. And then I go to Jacksonville, go through another school on learning how to take what I learned in my basic class or my basic school and how to apply it to the F-18. And then they throw you, then you get stuck doing, janitorial work for, 4 months. And they send you out to the flight line where you're now a complete rookie. And you spend, the summer of 1994, putting oil into aircraft engines after every flight and washing planes. So not very exciting way to live, but it gets better. You move up and you get better jobs and things like that. However, it was inefficient as hell back then. My son just finished up an 8-year tour, and it didn't get any better. I mean, just from the conversations I had with him over the years, it's certainly a mess. So, I'm sorry if people are going to lose their jobs. You should have planned better. You should have chose a better employer than the federal government. And a lot of these people use the terms like it's safe, it's stable. I don't have to worry about finding, jobs every few years. It's like, sorry, that's the way the rest of the world lives. And, you're not special. If anything, you're the help. You really even shouldn't be voting while you're working for the federal government. I mean, that's just my opinion. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'll be happy to help. All right. Well, hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.